Question 1. Which of the following is a primary reason why underwriting is important in the insurance industry? A. To prevent the need for claims to be paid out. B. To assess the risk and determine the terms of coverage. C. To ensure that premiums are collected on time. D. To provide legal advice to policyholders. Answer. B. To assess the risk and determine the terms of coverage. Explanation. Underwriting plays a crucial role in the insurance industry by assessing the risks associated with a policyholder and determining the appropriate terms, including coverage, premiums, and exclusions. The underwriter's job is to evaluate whether the risk posed by an individual or business is acceptable and, if so, to establish the appropriate terms. This helps to ensure the insurer remains financially viable while offering fair coverage to its customers. Underwriters consider various factors such as the applicant's health, financial stability, and risk factors associated with the insurance type. G. Life, health, property. Option is incorrect because underwriting doesn't aim to prevent claims from being paid but ensures proper pricing for the risks involved. Option C is incorrect as premium collection is a separate function of insurance companies, typically handled by agents or customer service, not underwriters. Option D is incorrect because providing legal advice is outside the scope of underwriting duties. Question 2. Mr. Thompson has applied for homeowners insurance and the underwriting process has revealed that his property is located in a flood-prone zone. What is the most appropriate action the underwriter should take in this situation? A. Decline the application due to the flood risk. B. Recommend additional coverage for flood risks to the policyholder. C. Offer a policy without any flood coverage, assuming the risk is minimal. D. Increase the premium without informing the policyholder about the flood risk. Answer. B. Recommend additional coverage for flood risks to the policyholder. Explanation. In this scenario, the underwriter should recommend additional coverage to address the specific flood risk. Flooding is often excluded from standard homeowners insurance policies, and in regions prone to floods, specialized coverage such as flood insurance may be necessary. The underwriter needs to inform the policyholder of the potential risks and offer an appropriate such as a separate flood insurance policy. By doing so, the underwriter is helping the policyholder mitigate the risk of financial loss due to flooding while ensuring the insurer remains protected. Options decline the application may not be necessary unless the flood risk is extremely high or the insurer does not offer flood coverage. Option C. Offer a policy without flood coverage may leave the policyholder unprotected against significant risks, which is not advisable. Option D. Increase the premium without informing the policyholder is unethical and fails to address the specific risk. Question 3. Scenario. Susan is an underwriter for a commercial property insurer. She is reviewing an application for a new business that has been in operation for only 2 years. The business is located in an area that experiences severe storms and the applicant's financial stability is somewhat uncertain due to recent losses. What should Susan's approach be in determining the coverage and terms for this application? A. Approve the application with standard coverage and terms as the business has 2 years of operational history. B. Reject the application due to the uncertainty in financial stability and storm risk. C. Approve the application but with higher premiums and modified terms to account for the risks. D. Offer the application to a reinsurance provider due to the perceived high risk. Answer. C. Approve the application but with higher premiums and modified terms to account for the risks. Explanation. In this scenario, Susan should approve the application but with higher premiums and adjusted terms to account for the potential risks. Since the business has only been in operation for 2 years and has uncertain financial stability, it represents a higher risk. Additionally, the business is located in an area prone to severe storms, which could lead to property damage and losses. By adjusting the premiums and terms, such as increasing deductibles or excluding certain storm-related coverage, Susan ensures that the insurer is adequately compensated for the additional risk while providing the business with necessary coverage. Optical approve the application with standard coverage and terms does not address the elevated risk due to the business's financial instability and location. Option B, reject the application, may be premature. Instead, the underwriter should modify terms to reflect the risk. Option D, offer the application to a reinsurance provider, might be an option but is not the most immediate or practical response for an underwriter in this situation, as adjusting premiums and terms is a more direct solution. Question 4. Which of the following is the primary purpose of risk selection in underwriting? A. To ensure that the insurer only accepts high-risk applicants. B. To match the risk profile with the appropriate policy terms and premiums. C. To minimize the administrative costs associated with underwriting. D. To prioritize the sale of policies with the highest premiums. Answer. B. To match the risk profile with the appropriate policy terms and premiums. Explanation. Risk selection is a key component of underwriting that helps underwriters match an applicant's risk profile with the appropriate policy terms, coverage, and premium rates by evaluating the risks involved, such as health, property, or business risks. The underwriter can determine the most suitable policy that balances coverage for the insured and risk mitigation for the insurer. Option is incorrect because underwriters do not seek only high-risk applicants. Rather, they aim to assess and categorize risk appropriately. Option C is incorrect because the purpose of risk selection is not to minimize administrative costs but to ensure proper risk management. Option D is incorrect because underwriting focuses on appropriate risk pricing, not necessarily prioritizing high premium sales. Question 5. Which of the following is an example of moral hazard in insurance underwriting? A. A homeowner installs a security system after purchasing insurance. B. A driver gets into an accident after their premium increases due to previous claims. C. A business neglects regular maintenance on a property because they have insurance coverage. D. A life insurer rejects an application based on the applicant's medical history. Answer. C. A business neglects regular maintenance on a property because they have insurance coverage. Explanation. Moral hazard refers to the risk that individuals or entities may take on higher risks or neglect precautions because they know they are covered by insurance. In this case, the business neglecting maintenance because it has insurance coverage for property damage is an example of moral hazard. The business may feel less motivated to take actions because any potential loss would be covered by the insurer. Option because homeowner installs a security system reflects a proactive risk management behavior, not a moral hazard. Option B, driver getting into an accident, refers to the consequence of higher premiums due to claims, but this is not an example of moral hazard. Option D, life insurer rejecting an application, is an underwriting decision based on risk evaluation, not moral hazard. Question 6. Scenario. Mr. Green has applied for health insurance. The underwriter has reviewed his medical records and found that he has a history of high blood pressure and diabetes, both of which are managed with medication. Given the applicant's medical history, what should the underwriter do? A. Approve the application at standard rates without modifications. B. Approve the application with a rider excluding coverage for diabetes-related treatment. C. Decline the application due to the medical history. D. Offer a modified policy with a higher premium to reflect the increased health risks. Answer. D. Offer a modified policy with a higher premium to reflect the increased health risks. Explanation. The underwriter should offer a modified policy with a higher premium to account for the increased health risks posed by Mr. Green's medical conditions. Since high blood pressure and diabetes are known risk factors, the underwriter needs to adjust the premium to reflect the added potential for healthcare costs while still providing coverage. Option is incorrect because Mr. Green's medical history increases the risk, so standard rates are not appropriate. Option B is incorrect as excluding diabetes-related treatment could lead to gaps in coverage and might not fully address the risk. Option C is incorrect because declining the application would be a drastic measure. A modified policy is more appropriate in this case. Question 7. When determining premium rates, what is one of the key factors that underwriters consider in risk classification? A. The applicant's educational background. B. The applicant's previous claim history and loss experience. C. The applicant's choice of insurance agent. D. The applicant's family size and marital status. Answer. B. The applicant's previous claim history and loss experience. Explanation. An applicant's previous claim history and loss experience are crucial factors in determining premium rates, as they help underwriters assess the risk of future claims. If an individual or business has a history of frequent claims, the underwriter may classify them as a higher risk applicant, leading to higher premiums. Option is incorrect because educational background does not directly influence premium rates. Option C is incorrect because the choice of insurance agent does not typically impact risk classification or premium rates. Option D is also incorrect because family size and marital status generally do not affect premium rates in the context of underwriting. Question 8. Which of the following statements about the Fair Housing Act and its relevance to underwriting is true? A. The Fair Housing Act prohibits underwriting based on race, religion, or national origin in homeowners insurance. B. The Fair Housing Act mandates that insurers offer the same policy terms regardless of risk level. C. The Fair Housing Act allows insurers to charge different premiums based on an individual's ethnicity. D. The Fair Housing Act provides insurers the authority to reject applications from specific neighborhoods. Answer A. The Fair Housing Act prohibits underwriting based on race, religion, or national origin in homeowners insurance. Explanation: the Fair Housing Act is designed to prevent discrimination in housing, including homeowners insurance. It prohibits insurers from making underwriting decisions based on race, religion, national origin, or other protected categories. Insurers must ensure that their underwriting processes comply with these regulations. Avoid discriminatory practices. Option B is incorrect because the Fair Housing Act does not mandate uniform policy terms regardless of risk. It ensures that policies are not discriminatory. Option C is incorrect because charging premiums based on ethnicity is a violation of the Fair Housing Act. Option D is incorrect because the Act does not give insurers the authority to reject applications based on location alone, though geographical factors can be considered in the context of risk. Question 9. What is the role of reinsurance in the underwriting process? A. To absorb all underwriting losses and ensure the insurer's solvency. B. To provide underwriting data to help set premiums and policy terms. C. To reduce the insurer's overall risk by sharing large losses with other insurers. D. To manage administrative tasks such as policy issuance and customer service. Answer: C. To reduce the insurer's overall risk by sharing large losses with other insurers. Explanation: reinsurance helps insurers manage risk by transferring a portion of the risk to other insurers. This is particularly helpful when dealing with large or catastrophic losses. By sharing the risk, the primary insurer can reduce its exposure and maintain financial stability even in the face of significant claims. Option is incorrect because reinsurance does not absorb all underwriting losses. It helps mitigate large risks, but the primary insurer retains some of the loss. Option B is incorrect because reinsurance does not directly provide data for setting premiums. Option D is incorrect because reinsurance is not involved in administrative tasks but in risk sharing. Question 10 scenario: Jane has applied for automobile insurance. The underwriter discovers that Jane has had 3 accidents in the past 5 years, 2 of which were her fault. She is applying for a standard policy, but the underwriter is concerned about the risk involved. What should the underwriter do? A. Approve the policy with standard coverage and rates due to the applicant's driving history. B. Decline the application due to the applicant's poor driving record. C. Offer policy with higher premiums and modified terms to account for the driving history. D. Approve the policy with reduced coverage limits, excluding accident-related claims. Answer C. Offer a policy with higher premiums and modified terms to account for the driving history. Explanation: the underwriter should offer a policy with higher premiums and modified terms to account for Jane's history of accidents, particularly since some were her fault. The increased premiums reflect the higher risk posed by the applicant's driving behavior, while the modified terms may include adjustments such as higher deductibles or coverage limits. This approach at the insurer is adequately compensated for the risk while still providing coverage. Option is incorrect because a standard policy does not reflect the elevated risk of frequent accidents. Option B is incorrect because rejecting the application outright is not the most appropriate course of action. Instead, the underwriter can modify terms to account for the risk. Option D is incorrect because excluding accident-related claims could leave the insurer exposed to unaddressed risks. Question 11. Which of the following is the main purpose of an underwriting guideline? A. To ensure all applications are approved without delay. B. To outline the criteria for assessing risk and determining policy terms. C. To ensure that insurers only accept low-risk applicants. D. To provide a standardized premium rate for all applicants. Answer B. To outline the criteria for assessing risk and determining policy terms. Explanation: underwriting guidelines help underwriters assess the risk of applicants by providing a structured approach for evaluating various factors such as health, property condition, or claim history. This ensures consistent and fair decision-making when determining policy terms. Option is incorrect because underwriting guidelines do not prioritize speed but proper risk evaluation. Option C is incorrect because underwriters accept a range of risks, not just low-risk applicants. Option D is incorrect because premium rates are based on risk factors not standardized for all applicants. Question 12. In the context of underwriting, what is the significance of a loss ratio? A. It measures the amount of claims paid relative to the premiums earned. B. It represents the amount of profit made from an insurance policy. C. It is a measure of an insurer's administrative costs. D. It refers to the total premiums written in specific period. Answer A. It measures the amount of claims paid relative to the premiums earned. Explanation. The loss ratio is an important indicator used in underwriting to assess the profitability of an insurance policy. It is calculated by dividing claims paid by premiums earned. A higher loss ratio indicates that the insurer is paying out more in claims than it is earning in premiums, which may suggest that the risk is not adequately priced. Option B is incorrect because the loss ratio does not measure profit directly. Option C is incorrect as administrative costs are not reflected in the loss ratio. Option D is incorrect because total premiums written is a separate metric that does not directly relate to the loss ratio. Question 13. Which factor would most likely lead an underwriter to offer higher premiums for the homeowner's policy? A. The home is located in an area prone to flooding. B. The home has recently undergone major renovation. C. The homeowner has an excellent credit score. D. The homeowner has multiple insurance policies with the same insurer. Answer A. The home is located in an area prone to flooding. Explanation. Homes located in areas prone to natural disasters such as floods, earthquakes, or hurricanes are considered higher risks. The underwriter will likely raise the premiums to compensate for the increased likelihood of claims. Option B is incorrect because renovations can often increase a home's value but do not necessarily increase risk. Option C is incorrect because an excellent credit score generally lowers premiums due to the association between good credit and low risk. Option D is incorrect because bundling policies often leads to discounts, not higher premiums. Question 14. What is the primary purpose of a medical underwriting process in health insurance? A. To predict future medical expenses based on current health conditions. B. To determine the applicant's eligibility for the best policy available. C. To analyze the risk of insuring an individual based on their health history. D. To set the policy's premiums based solely on age and gender. Answer C. To analyze the risk of insuring an individual based on their health history. Explanation. Medical underwriting is used to assess an applicant's health status and determine the likelihood of future claims based on their medical history. This helps the insurer decide if the applicant can be covered, and if so, what premium rate. Option is incorrect because while underwriting considers medical conditions, it is not solely to predict future expenses. Option B is incorrect as the goal is to assess risk, not to provide the best policy. Option D is incorrect because medical underwriting considers more than just age and gender. Question 15 scenario. Tom has been denied health insurance due to a pre-existing condition. However, he applies for the same coverage after a year during which his condition improved. What is most likely to happen in this case? A. He will automatically be granted coverage with standard terms. B. He will still be denied coverage because of the pre-existing condition. C. He will receive a higher premium due to the previous health condition. D. The insurer will offer him a limited policy that excludes coverage for his pre-existing condition. Answer D. The insurer will offer him a limited policy that excludes coverage for his pre-existing condition. Explanation. If Tom's condition has improved, the insurer may offer him policy, but it may exclude coverage for that pre-existing condition. Insurers often limit coverage for conditions that existed before the policy's effective date. Option is incorrect because Tom's previous condition could still affect the policy. Option B is incorrect because improvement in the condition could lead to coverage, although with exclusions. Option C is possible but less likely, as the insurer may choose to offer limited coverage rather than higher premiums. Question 16. Which of the following is an example of underwriting fraud? A. An applicant omits a past driving violation to reduce their insurance premium. B. An applicant discloses all relevant medical history when applying for health insurance. C. An applicant accepts a higher premium for better coverage. D. An applicant reports an accident as a minor incident to avoid paying the deductible. Answer A. An applicant omits a past driving violation to reduce their insurance premium. Explanation. Underwriting fraud occurs when an applicant intentionally withholds or misrepresents information to receive more favorable terms or lower premiums. Omitting past violations is a clear example of this type of fraud. Option B is incorrect because disclosing medical history is the right approach in underwriting. Option C is incorrect because choosing higher coverage for a higher premium is a standard part of the underwriting process. Option D refers to claim fraud, not underwriting fraud. Question 17. Which of the following best describes the role of an actuary in the underwriting process? A. To evaluate the risk of loss and determine appropriate pricing strategies. B. To interview applicants and gather information for underwriting. C. To approve or deny applications based on established guidelines. D. To issue policies after underwriting has been completed. Answer A. To evaluate the risk of loss and determine appropriate pricing strategies. Explanation. An actuary's role involves assessing the potential risk of loss and using statistical models to determine the appropriate pricing for policies. Actuaries analyze data such as historical claims and economic trends to help set premiums that are fair and adequate for the insurer. Option B is incorrect because interviewing applicants is the responsibility of underwriters. Option C is incorrect because actuaries do not make approval or denial decisions. Option D is incorrect because issuing policies is the role of underwriters and insurance agents, not actuaries. Question 18. Which of the following factors would most likely lead to a decrease in an applicant's life insurance premiums? A. Recent cancer diagnosis. B. History of smoking and alcohol use. C. Healthy lifestyle with regular exercise. D. Family history of heart disease. Answer C. A healthy lifestyle with regular exercise. Explanation. A healthy lifestyle with regular exercise decreases an applicant's risk of future health problems and thus lowers life insurance premiums. Insurers reward applicants who demonstrate positive health habits with lower premiums. Option is incorrect because a cancer diagnosis increases health risks. Option B is incorrect because a history of smoking and alcohol use typically increases premiums. Option D is incorrect because a family history of heart disease can indicate an increased risk of cardiovascular problems, which can result in higher premiums. Question 19. Which of the following would an underwriter consider when assessing the risk of a commercial property insurance application? A. The applicant's business plan and future growth projections. B. The applicant's financial statements and credit rating. C. The applicant's personal history of insurance claims. D. The geographic location and environmental risks of the property. Answer D. The geographic location and environmental risks of the property. Explanation. The geographic location and environmental risks, such as flooding, hurricanes, or wildfires, are important factors when assessing the risk of a commercial property. Properties in high-risk areas may require higher premiums or specific exclusions in the policy. Option is incorrect because business plans and growth projections are generally not considered in property underwriting. Option B is important for evaluating the financial stability of a business, but not a primary focus in property risk evaluation. Option C is more relevant to personal lines underwriting than commercial property. Question 20. Which of the following statements is true regarding the application of an insurance policy after it has been underwritten? A. The insurer is obligated to provide coverage even if the application was incomplete. B. The policy can only be issued once the underwriting process is complete. C. The applicant is automatically entitled to coverage after the underwriting review. D. The underwriter has the sole authority to reject the application without consulting other departments. Answer B. The policy can only be issued once the underwriting process is complete. Explanation. The underwriting process must be completed before an insurer can issue a policy. The underwriter assesses the risk and determines the terms and premiums, ensuring that the policy meets the insurer's guidelines. Option is incorrect because an incomplete application could lead to a policy being denied or delayed. Option C is incorrect because the insurer may still choose to decline coverage after underwriting. Option D is incorrect because the underwriting decision is often reviewed by other departments, especially for complex cases. Question 21. Which of the following types of insurance would require the most detailed underwriting process? A. Term life insurance. B. Homeowners insurance. C. Automobile insurance. D. Disability insurance. Answer D. Disability insurance. Explanation. Disability insurance requires the most detailed underwriting because it involves evaluating an applicant's health, occupation, and lifestyle and determining the likelihood of long-term disability. The insurer must assess the risk of future disability claims, which requires thorough medical and occupational information. Option is incorrect because term life insurance generally involves less complex underwriting compared to disability insurance. Option B and C are also incorrect as they tend to focus more on property risks or driving history rather than long-term disability factors. Question 22. What is the purpose of underwriting pools? To allow insurers to share risk and collectively manage high-risk policies. B. To increase premiums by grouping low-risk policies together. C. To offer standard policy terms for all applicants in high-risk areas. D. To reduce underwriting costs by centralizing policy issuance. Answer A. To allow insurers to share risk and collectively manage high-risk policies. Explanation. Underwriting pools are used by multiple insurers to share the risks associated with high-risk policies such as in areas prone to natural disasters. The pool allows insurers to limit their exposure while ensuring coverage for high-risk applicants. Option B is incorrect because pooling high-risk policies does not lead to increased premiums. It spreads the risk among multiple insurers. Option C is incorrect because pools do not always result in standardized terms. Option D is incorrect because pooling is about risk sharing, not reducing administrative costs. Question 23. Which of the following factors would most likely lead an underwriter to reject an application for automobile insurance? A. The applicant has a history of multiple speeding tickets. B. The applicant has a clean driving record for the past 10 years. C. The applicant owns a luxury vehicle. D. The applicant is seeking the minimum coverage required by law. Answer A. The applicant has a history of multiple speeding tickets. Explanation. A history of multiple speeding tickets indicates a higher likelihood of future accidents and claims, which increases the risk for the insurer. This could lead to a rejection or higher premiums for the applicant. Option B is incorrect because a clean driving record generally lowers the risk and leads to better coverage terms. Option C is incorrect because owning a luxury vehicle does not automatically lead to rejection, although it might result in higher premiums. Option D is incorrect because seeking minimum coverage is not a reason for rejection unless there are other factors involved. Question 24. Which of the following would an underwriter most likely require for an applicant seeking life insurance? A. Proof of income. B. A physical exam. C. Proof of vehicle ownership. D. A home inspection report. Answer B. A physical exam. Explanation. Life insurance applicants are often required to undergo a physical exam to assess their health and determine the risk of insuring them. This helps the underwriter set appropriate premium rates and policy terms. Option is incorrect because proof of income is typically not required for life insurance. Option C is incorrect because vehicle ownership is not relevant to life insurance underwriting. Option D is incorrect because a home inspection is not needed for life insurance policies. Question 25. What is the primary purpose of a reinsurance arrangement in the insurance industry? A. To provide coverage to policyholders when their primary insurer fails. B. To share the risk of large claims between multiple insurers. C. To ensure that an insurer's policies are priced uniformly. D. To assess the financial health of an insurance company. Answer B. To share the risk of large claims between multiple insurers. Explanation. Reinsurance is an arrangement where one insurer transfers a portion of its risk to another insurer, the reinsurer. This helps the primary insurer manage the risk of large or catastrophic claims. Option is incorrect because reinsurance is not intended to provide coverage if an insurer fails, but rather to share risk. Option C is incorrect because reinsurance does not focus on uniform pricing. Option D is incorrect because reinsurance focuses on risk management, not financial assessment. Question 26 scenario. Jane applies for a homeowner's insurance policy but fails to disclose that she has previous history of making several claims for water damage. How might this affect her application? A. Her application will likely be approved without any issues. B. The insurer may offer her coverage but exclude water damage claims. C. The insurer may increase her premiums due to the past claims. D. The insurer may cancel her application or increase the premium due to non-disclosure. Answer D. The insurer may cancel an application or increase the premium due to non-disclosure. Explanation: failure to disclose a history of claims is considered material misrepresentation, which can lead to an insurer cancelling the application or significantly increasing the premium to account for the higher risk. Option is incorrect because non-disclosure of prior claims can result in penalties such as higher premiums or policy cancellation. Option B is incorrect because the insurer would likely address the omission more severely. Option C could be true in some cases, but the insurer would usually address non-disclosure first. Question 27. What is an example of a moral hazard in underwriting? A policyholder who drives recklessly due to knowing they are insured. B. An applicant who misrepresents their medical history to secure low premiums. C. An insurer denying coverage based on an applicant's credit score. D. Policyholder filing claim for small loss to avoid out-of-pocket expenses. Answer A. A policyholder who drives recklessly due to knowing they are insured. Explanation: a moral hazard occurs when a policyholder engages in riskier behavior because they know they are covered by insurance. This increases the likelihood of a claim being filed. Option B refers to a fraudulent activity misrepresentation rather than a moral hazard. Option C refers to a credit-based decision, which is a separate underwriting factor. Option D describes an applicant who may be taking advantage of the insurance policy but is not necessarily a moral hazard. Question 20. Which of the following is typically not considered in the underwriting process for a health insurance policy? A. The applicant's medical history. B. The applicant's occupation. C. The applicant's lifestyle habits. D. The applicant's political views. Answer: D. The applicant's political views. Explanation: political views are irrelevant in the underwriting process for health insurance. Insurers focus on factors that affect health risks, such as medical history, occupation, and lifestyle habits. Option A, B, and C are all factors that are commonly evaluated during the underwriting process for health insurance as they directly impact the applicant's health risk. Question 29. Which of the following would an underwriter consider when determining the insurability of a commercial property? A. The credit score of the property owner. B. The square footage of the property. C. The property's proximity to fire hydrants and emergency services. D. The number of employees working on the property. Answer: C. The property's proximity to fire hydrants and emergency services. Explanation: the proximity of commercial property to fire hydrants and emergency services is an important consideration for underwriters because it affects the risk of loss due to fire or other emergencies. Properties that are farther from these services are considered higher risks and may have higher premiums. Option is more relevant to personal lines insurance, not commercial property underwriting. Option B, while relevant to property valuation, is not the primary factor in determining insurability. Option D may be considered in some cases, but is not as directly relevant to insurability as the proximity to emergency services. Question 30. How can an insurer mitigate underwriting risk? A. By using reinsurance to transfer some of the risk to another insurer. B. By refusing to offer policies to high-risk applicants. C. By setting all premiums at the same rate for all applicants. D. By limiting the number of policies written each year. Answer A. By using reinsurance to transfer some of the risk to another insurer. Explanation: reinsurance allows insurers to share or transfer some of their risk to another insurer, thereby reducing the overall financial exposure from large or catastrophic claims. Option B is incorrect because refusing coverage to high-risk applicants does not mitigate risk. It only avoids it. Option C is incorrect because setting all premiums at the same rate does not take into account the different risks posed by different applicants. Option D is incorrect because limiting the number of policies does not directly reduce underwriting risk.